All right, what a wild month of April. The massive amounts of ups and downs that we went through with the stock market. CNBC's on there right now. I think they're up right now. They're saying what the 10-year treasury is 4.3, which it's went up and down. It was like 3.9 and then poop, pop back up. Anyways, I said all that to say, like, if you are making and when you're making investments, you want to make a sound investment. Your goal here, number one, whenever you're investing money, Warren Buffett says it. Steve Schwarzman from Blackstone says it. Number one rule of investing money: don't lose money. And naturally, Warren Buffett, the Oracle, always says the same thing as rule number two. We all quote this stuff, right? Don't forget rule number one: don't lose money. So, the number one game in investments, in making money, investing money, is really capital preservation. You preserve capital first, you make capital second. That's how it goes. Do not forget that. And with that said, I wanted to say something about when making investments, money investments. I have a couple of things. I want to go over 5 things today with you guys that I think is going to be a massive benefit and value. So, number one thing that I like to talk about, and I got this from my mentor, Grant Cardone. He talks about it. I kind of switched it a little bit. So it does make more sense because I'm talking about real estate investments, even though we're talking about money, period, right? But when you're investing, number one thing you want to do is you want to invest for the long term. A lot of people, especially for real estate investors, people, well, let me clarify that. There's people who actively do real estate, so naturally you're going to be in and out of a deal. And then you are a like, those are fix and flippers. We're not talking about those guys. Even the syndicators, they find what's called value add, meaning they add value to the multifamily property. We'll talk about multifamily. They raise the rents, raise the income, lower the expenses, do some renovations, and then they're in and out of that deal. But right now is the time to not be in deals short term. 3-year deals, man, that's rough. You might want to lock down, unless you can buy it all cash. You can get a 3-year deal, but it has to be a killer deal. So if you're thinking long term, though, when I say long term, I'm talking about 7 years, 10 years, be in an investment to win the game, right? Everybody, like you can, even if you play sports, you look at MMA, you watch major fights. If a fight goes 5 rounds, you can't or you shouldn't go back to your corner in round three and be like, you know what, I think I'm done, right? You're there to fight the full fight, whether you're winning, whether you're losing, you're there to play that game. And it's the same with your investments, all right? So number one thing, invest for long term. Don't be short-sighted, man. Like that's how people lose money. You're thinking about creating generational wealth for your family with multifamily real estate. You don't want to play this game, the stock market game, unless you're a big player. All right. So that's number one, invest for the long term. Number two, selling shouldn't be your only exit. So when we're looking at multifamily real estate, we know we have multiple exit strategies, multiple exits with an S makes it make sense. So yes, we can sell. But then when we sell, we're going to 1031 exchange or we're going to do what we're going to do, roll that into another deal. So we're going to keep our capital. Number one, don't lose capital, protect capital, right? Preserve your capital so you don't lose it to taxes. Or we're going to refinance that property. We're going to go back to the debt market if that's it. Right now, the debt market's not as friendly, but that happens. You go back, you refinance your property. You can pull out your capital and that's non-taxable event, roll that into another deal, or you can not pull out capital. You can actually refinance and lower your interest rate, which a lot of people are going to be doing with their investments. But if you're an investor, passive investor, limited partner into a deal, you want to be thinking about that. You want to be like, hey, what are their exits? What are the multiple exits you have? We can refinance, we can cash out refinance, we can sell the deal in 1031 exchange into something else or roll that capital into something else. We can also take all of the assets we have. Let's say we have 15 properties or 10 properties or 20 properties, and they're all 200 units each, right? So we take all 2,000 units and we seed a REIT. We create a vehicle, which is a real estate investment trust. We put all of those assets in the REIT, and then we take that to Wall Street, right? We go take it to the banks, institutions, all the other stuff. We get an underwriter and they underwrite it and they give us a value for the actual company itself with all the assets. We take it to Wall Street and then we turn it into paper, which means that there's an IPO or initial public offering. That's another way to do that. Or you can buy a management property management company, and then you can oversee the other properties, and then you roll those properties that you have underneath that management company, and then you have another company, and then like there's so many different ways you can exit an investment opportunity if you are doing it the right way. And can I do all this stuff? Not sure. But I know this. I have multiple exits. It's not just sell the property. That is not how you're going to be doing when you're thinking about making capital or money investments with anybody, yourself as a passive investor. But you need to know this if you're somebody like me who's a fund manager and we're talking to investors. All right. So the next thing, make sure that your investments or the capital that you're investing is going into a proven asset class. And again, and I say that because real estate itself has been around for thousands of years, right? 2,000 years. In the Bible, people fought for land, areas, regions. Like even it's still happening now. The Vatican has owned real estate. The Vatican is one of the largest real estate owners on the planet. And then it's like McDonald's. But it's a proven asset class. People will always need a place to live. So investing money in real estate, and I'm talking about institutional quality, multifamily, cash flowing real estate, not vacant land, not office, not retail, not wholesale, not industrial properties, things like that. Like those type of assets. Proven asset, multifamily is a proven asset class as a commercial institutional quality assets. It's proven. Institutions do it, banks do it, endowment funds do it, sovereign funds invest in them, pension funds. Everyone invests in it. It's a proven asset class. You don't have to guess why, because you're preserving capital. If it's good enough for you, if it's good enough for them, it's got to be good enough for you. All right. So number four, only invest in things that you understand. Here's why I like multifamily real estate. I'm going to move this over a little bit. I can understand it. It's not complicated. Now you can have retail. Retail's not complicated either. It's price per square foot. Like I said, if you get a big tenant in there like Lowe's or Home Depot, if you have something like that, or Ralph's or Trader Joe's or Whole Foods or Sprouts, like that's a retail shopping center and they're gonna pay for the amount of square foot they have, whatever the dollar is. But with multifamily real estate, it's just people that live there. Me and you, other people out there, hardworking people, families, people who are executives, people who are blue collar, where they work construction, people who work from home, they need a roof over their head and a place to stay. To me, I understand that. I understand that everyone needs a place to live. So they're probably going to pay for the place where they live, whether they rent or whether they buy, doesn't matter. So when I know that that's where I'm going to invest my money in housing, because I'm talking about housing, it makes more sense. And it should be for you too. So when you're going to make an investment, you want to understand what you're doing. You want to have full understanding, which is why I love residential, multifamily, commercial real estate from that perspective. And number five, which is the big one, you want to have tax advantages that go along with your investments. So, real estate is probably one of the most highly decorated tax advantage asset classes that you can invest your money in on the planet. This country was built off of acquisition of land. Getting here, landowners came here, they wanted the property opportunities, and that's what was given. That's why there's so many tax advantages to people who are property owners or invest their money and their partners in those deals. For example, I think Trump right now, President Trump, thank God for the guy, is now putting together some type of tax bill that hopefully will be signed that'll bring back bonus depreciation, which the 100% bonus depreciation. Let's say it's not 100. Let's just hope it doesn't get phased out. That is a tax advantage for you as an investor, a passive investor in a deal to get the benefits of the depreciation of that property. Meaning, like if you make cash flow from that property, you make income, you get the tax benefits passed on to you as a potential partner or an owner, and that offsets any money you made. And if you can keep more of what you made, that's how wealth is created, right? And you pay less taxes on what you're made, and you keep more of what you make, so you make more of what you make. Keeping it simple like that. You have 1031 exchange benefits. You have deduction benefits from writing off any mortgage payments, interest payments on your mortgage. Like I said, the depreciation, the bonus depreciation, you can accelerate it. Instead of spreading it out over 27 or 35 years, it can happen all in year one, year two, year three. That is massive. So when you're thinking about investing, making investments with your money, that's why you want to make sure that when you're doing something, there's these checkpoints. Like I said, I'll go over them again really quickly. Number one, invest for the long term. Stay with something. If you're going to get married, get married. You're not getting married to get divorced from it. Same thing with your investments. If you're going to be in an investment, stay with that investment. Think long term. Number two, selling should not be your only exit out of your investments. If you're like me, I'm thinking, okay, fine. If we're going to have all of our investors, my goal is to take care of my investors, get the right assets. So when we exit a deal, I can refinance, which is still give your money back. That's an exit. keep you in the deal so you still get cash flow, so you're still in there. We can refinance, lower our interest rate so we have more cash flow. That's an additional exit because we're getting more money back, right? We can bundle the portfolio up. We can exit that way, get all of our money out. We can not do any of that. We can buy another group, buy another private equity real estate fund, put all of our deals in there, and then refinance that whole thing, give all your money back and extra money back. Like there's so many different ways that we can do this thing and carve this up. All right. Number where am I at? Three, it's a proven asset class. We all understand housing. You live in a house unless you're homeless. And if you're homeless, I mean, don't be homeless, man. You need a place to be. So we all understand that real estate as an investment vehicle is a proven asset class. So when you're investing money, you want it to be proven. Now, I'm not saying it doesn't work. Um, Bitcoin's doing great right now. Right now, it is proven. People have been in it for a long time, but it's highly volatile. So in my mind, I'm like, look, if I wanted to park money someplace, get my money out of my 401k and IRA, take my money out of my bank savings that's not really paying me anything from a quarter of a percent to 4%, that when I take any gains off of it, I'm going to get taxed if I'm a heavy hitter at 40%. I'm going to lose 2% or 1.6% of the 4% I gained. It doesn't make sense to do that. So like in my mind, the volatility of that is like, dude, I don't want to play that game. I'd rather just stick to something I know and I'll be better off for it. Next, only invest in something you understand. That's it, right? Real estate, we understand it. It's a house, it's an apartment building. Um, People are always going to need housing. There's a shortage of housing. There's a supply and demand issue, which means it's always going to be valuable. Rents have went up in this country since 1945. It's going to continue to go up as we continue to see what we continue to see right now with inflation, tariffs, taxes, uncertainty in the stock market. That happens. There's been a market crash every I want to say 12 years or something like that since the 50s, right? It's going to continue to happen. So it's still going to happen. And the people who didn't struggle through all those crashes are the people who owned real estate and they kept their money there. They just continue to win. All right. And last but not least, the tax advantages. You want to have something or put your money in a place where you get the tax advantages and benefits of being in that asset class as a vehicle. So you get to keep more of what you make. So you make more of what you make. Boom. I'm going to coin that phrase. So, anyways, I hope that helps you guys. I wanted to do this. I went a little long, but not really, because I thought this was valuable. When you guys take a look at it and you go, dude, when you're investing your money, you gotta have some don'ts some things that you don't, you like, hey, I'm not gonna do this. You gotta have something you say no to. Like me and my team were just talking about this, and we are talking about looking at deals. It isn't about saying yes to everything. I would like to do that, but I need to have something I say no to so I know what to say yes to. And if you don't have that with your money, you need to be able to earn money or make money, revenue in your business or your company or wherever you work, which you probably know how to do that. We're taught that as children. Cut the yard, you get paid. Wash the car, you get paid. Do good, you get paid. Get a job, you get paid. The difference of it is most people, and outside of getting paid and making money, we all know how to save money. Put money away, don't spend it. But very few people know how to multiply money. Multiplying money, which they don't teach in school, they don't teach in college, they don't teach in high school. I didn't know that. I grew up without a wealth mentor. I learned on accident, buying real estate as a business. But even then, I transactionally bought real estate as a business. It wasn't until I really like went all in on raising money, getting partners, doing multifamily deals, and seeing the long-term benefits and gains of investments. My money and my investors' money did wealth start coming into the conversation. All right. So I said all that to say, I appreciate you guys. I know I went fast, man, but this is exciting for me. I want to talk about this. I want to do deals with you. I don't do this because I'm just like, yeah, let's just talk. I do this because I want to do business with you guys. I want to transact with you guys. That comes through education, that comes through talking, that comes through information and showing up here every day. So I appreciate you guys for doing it with me. So, like this video, comment on the video, share this video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. I want it all, man. Even leave me a comment. Leave me a comment. What did you take away from these 5 things? Where are you at on this list that when you think about investing your money, whether it's a little or a lot? But that some guy say, oh, well, if we have $50 million, we wouldn't be on here watching you. Okay, fine. Maybe. I know guys who have way more than $50 million to invest in their business with business revenue. They watch. They're paying attention. One of my investors, partner of mine, Brian, he sees my stuff all the time. And their company did over $1 billion in revenue. So whoever said that, man, you're off your rocker. Don't have that attitude. Be more excited about creating success, being educated and learning more about people who are growing and doing stuff. Whether I'm doing more than you or you're doing more than me, doesn't matter. I will continue to show up, but I'm here for you. Anyways, so again, if you need anything, let us know. Go to bell-capital.com. You can register. You can, if you're an accredited investor, you have a good attitude, you love the idea of cash flow, appreciation, future appreciation, tax advantages in real estate. Love to talk to you. Love to see where we can help you. You can go there, register. You can take a look at our open fund if you're accredited, or you can schedule a call with somebody, myself or somebody on my team, and we will answer any questions you have and either get you started with your investment or we'll stay in touch. All right. So I appreciate you. Have a great day today. Let us know how we can help. Boom. Are you an accredited investor with 300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with 300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.